Welcome to Woods of Stardon. This is CH. I will be covering the Aberdeen Income Plus Fund in this video, which is part of my Absolutely Biased Comments or ABCs series. The aim of this series is to cover one fund per video to share how an individual investor can try to find out more about a fund from public sources and do some basic research or simple due diligence on the fund before deciding to buy the fund or walk away. Some quick disclaimers before we start. This is not a product sales pitch or a recommendation to buy. I'm not sponsored by anyone to do this video. Please do your own research and be clear about the product features and risks before taking any action. This video is done as a follow-up request from a viewer's comment in my previous video covering the Lion Global Sing Dollar Money Market Fund. If you would like me to cover any funds or ETFs, do drop me a comment in any of my videos, and I'll be happy to work on it as long as I can find enough information on the product. Aberdeen was originally established in 1983 as Aberdeen Asset Management, a Scottish boutique fund manager based in Edinburgh, UK. It was listed in the London Stock Exchange since 1991 and grew quickly to become one of the leading listed fund providers in Europe. Aberdeen is also a pioneer in Asia-Pacific markets, having investing since 1985, and was quite well known in the region for its Asia products back in those days. In 2017, Aberdeen merged with Standard Life, a UK-based insurance and asset management business, and started its years of confusing branding mishaps. The new company was named Standard Life Aberdeen, while the asset management was named Aberdeen Standard Investments. The entity didn't last too long, with the Standard Life insurance business sold in 2018 and the Standard Life branding sold in 2021, both to Phoenix Group, another UK insurance company. Aberdeen then continued its branding mishaps by rebranding itself to Abrdn, pronounced the same way but spelt without all the E's. Aberdeen finally came to its senses and decided to rebrand in March 2025 back to Aberdeen, with the parent entity as Aberdeen Group and the asset management arm as Aberdeen Investments. Renaming all its products will probably take time though, which is why this fund is still having the weird Aberdeen in its name currently. Aberdeen today manages €438 billion of assets for the wide spectrum of clients across 80 countries. Its core competencies are in equities, credit, and real assets solutions, though it has been trying to grow other offering categories. The Aberdeen Income Plus Fund covered in this video would fall under the multi-asset category. The Aberdeen Income Plus Fund is a sub-fund under the Aberdeen Select Portfolio Fund family. The fund family is set up as a Singapore Umbrella Unit Trust. The fund is registered as a MAS authorized scheme, which means it is suitable for retail investors. The Aberdeen Income Plus Fund fact sheet states that the fund is managed by Ray Sharma Ong. While the Aberdeen website doesn't seem to have manager bios, I found Ray's bios in the fund prospectus as seen here. Ray is based in Singapore and is the head of multi-asset investment solutions and deputy head of bespoke client solutions for the Southeast Asia business. He also seems to be deeply involved in idea generation and market research in the firm, being the chairperson for the Global FX Research Group. Ray joined Aberdeen in 2020 and prior to that had over a decade of experience in multi-asset investment solutions in JP Morgan. There is, however, no information available on the rest of the investment and research teams supporting him. The Aberdeen Income Plus Fund provides the same fund objective in the fund webpage and fact sheet that states that the fund aims to achieve consistent natural income with long-term capital growth. As income is stated first, and that the fund name is stressing on income, we can assume that generating and providing that consistent income takes a higher priority than capital growth. This follows with a long list of asset classes that the fund can invest in, including global equities and bonds, as well as commodities-related securities. This implies the fund has a global multi-asset strategy. The next paragraph states that the fund doesn't have a defined benchmark. While the fund can have a dynamic multi-asset allocation approach, I think the fund should still set a benchmark with a global equity index and a global bond index, in either a 50-50 mix or a ratio that the fund will likely have in the long run. This is so there is a benchmark to guide the direction and performance of the fund, so that both the fund manager and investors are clear what to expect from the fund. The prospectus unfortunately doesn't provide any additional meaningful information in terms of investment strategy and process. As an investor, I do not know how the asset allocation strategy is derived, or whether the fund uses quantitative modeling or fundamental research approach, or how the bonds and equity selection works, or how the income objective impacts the investment choices. In short, this fund is like a black box. I think it is important for Aberdeen to improve on this and provide some details in order for investors to understand better what this fund is trying to do. There is one important point not covered in the prospectus but found in a footnote in the fund fact sheet. That is, the fund has a target distribution payout policy that is currently set at 6.5% per annum. Referring back to the investment objective of generating natural income, this implies that the fund will need to invest in stocks and bonds that can generate dividends and coupons of at least 6.5% per annum on average. The Aberdeen Income Plus Fund was launched in October 2024, giving it slightly over a year of track record. Fund AUM is currently at around 139 million US dollars, which is quite small. I think the fund needs to reach at least 200 to 300 million US dollars to be more sustainable, as a sharp market correction or substantial redemptions can drive the current fund size down too much and force the fund to terminate due to size problems. The small size could be due to the fund having only Sing dollar share class that limits investor interest, or that Aberdeen has not actively promoted the fund, or other unknown reasons. The fund webpage is not updated as there are no portfolio breakdown or holdings data available, which should not be happening for an established fund provider like Aberdeen. The fund fact sheet fortunately contains some portfolio information. Otherwise, I think Aberdeen will get into trouble. That being said, for a multi-asset strategy, the fact sheet doesn't provide any information on what is the broad asset allocation split between equities and bonds, which should be common sense to provide to investors. The country and sector breakdown appear to also mix up equities and bonds exposures, so that's not really useful as well. I'll come back to the top 10 holdings in a while, but let's use Morningstar data to get better clarity on the fund portfolio. Morningstar has only end May 2025 portfolio data of the fund, but that's better than nothing. For the most important broad asset allocation breakdown, Morningstar shows the fund has 31% equities, 57% bonds, and 11% cash. I assume the high cash levels are subscription inflows waiting to be deployed, so a fully deployed portfolio might end up around a 35% equities plus 65% bonds mix thereabouts. Let's look at equities data first. Market cap breakdown shows the fund seems to have an overweight in large caps but not mega cap stocks, which is a little surprising because this immediately results in a big deviation compared to typical MSCI World kind of global equity exposure if the mega cap stocks are missing in the portfolio. However, as most of the mega cap stocks are growth buyers and doesn't pay out much dividends, they would therefore not be aligned to the investment objective of the fund. Regional breakdown looks quite normal, with about 2/3 in US and the rest mostly in Europe and Asia. Sector breakdown shows overweights in more defensive sectors that typically have higher dividend yields, such as financials, real estate, and utilities. Financial measurements warrant some attention from investors. Dividend yield at 8.33% looks exceptionally high. considering MSCI All Country World Index only has about 1.7% dividend yield. The negative sales growth, cash flow growth, and book value growth are concerning, as it seems to imply that the fund is investing in companies with really high dividend yields but are facing business problems. Next on bonds data. Morningstar shows the fund is mainly invested in corporate bonds. While bond maturity looks diversified, the bulk of the exposures are in the 3 to 7 years maturity range. More than half of the bond exposures are high-yield credit rating. This results in a pretty high 8.32% weighted coupon for the bond positions. While the weighted price is also a little high, it seems that the bond exposures should be able to achieve at least 6.5% yield to maturity in order to contribute to the natural income objective of the fund. With this additional information on the portfolio, let's revisit the current top 10 holdings in the fund fact sheet. Based on the descriptions, I can only assume this top 10 list refer only to equity exposures. We can, however, already see how different this compares to the typical global equity markets, and it makes me wonder what really is the thought process behind the stock selections. For example, while we already know the mega cap tech stocks are missing, it is curious why the fund decided to go with hardware names like Seagate and Dell. Other names like Annaly and Ultra are more expected, as these stocks have really high dividend yields. The fund currently has around 250 holdings in total. Without more information available, I would give a rough estimate that the fund probably holds around 50 to 60 stocks, and the remaining are bond positions. As a Singapore domiciled product, the Aberdeen Income Plus Fund seems to be created specifically for Sing Dollar investors only. It currently has just two Sing Dollar currency hedge share classes, one in accumulation and the other with a monthly distribution frequency. Both share classes were created at fund launch in October 2024. Morningstar data shows that almost all the fund's assets are under the distribution class, so there is a risk that the accumulation class may be terminated if it continues to have no asset inflows. Investors who are interested in this fund should therefore go for the distribution class to avoid this risk. The fund charges a 1.45% management fee. Given the short lifespan of the fund, the total expense ratio or TER is not published yet. I would assume the other expenses to be around 0.5% currently, and therefore TER should be around 2%. Up to 70% of the management fee may be paid by Aberdeen to distributors as trailer fees. Distributors are allowed to charge up to 5% subscription fee for this fund, although I think anything more than 2% for mutual funds is excessive. As mentioned earlier, the main share class of the Aberdeen Income Plus Fund is the monthly distribution class. The distribution details are available in a PDF report that can be downloaded from the share class webpage. Here is the extract from the PDF report. While it looks comprehensive with a lot of information, it strangely omitted the most important data, that is the actual distribution amount each month. I really don't know whether to laugh or cry at this. Morningstar fortunately has this data, and we can see here that the fund seems to adopt a smoothened payout approach by keeping the monthly distribution amount at around the same. Adding up the distributions also calculates to around 6.5% on an assumed $1 NAV, which is the target payout yield of the fund. Coming back to the PDF report, there is an important observation for investors to note. That is, the underlying portfolio yield that was well above 6% at the start of 2025 has been declining through the year and is now only 4.35% as of end November 2025. This is way lower than the target 6.5% payout yield, which means the fund has failed to meet its investment objective to generate this target payout yield via natural income only. The fund therefore has three options going forward. The first is to reduce the target payout yield so that it can meet its investment objective. The second is to make changes to its investment strategy to increase the underlying portfolio yield. The third is to continue to ignore and not meet its investment objective. I don't know which option the fund will go for, but I think the first option is the most prudent one. Those who are already invested in the fund should monitor this aspect closely. As 6.5% is a pretty high payout yield for a defensive multi-asset strategy, the NAV of the distribution class has seen little growth since inception. It would be good if the fund can generate higher returns so that investors can get more meaningful NAV growth while clipping the high distributions. Performance data of the Aberdeen Income Plus Fund is found only in the fund fact sheet, that is displayed in a table with various time periods. Given the fund was incepted only in October 2024, the track record available for us to analyze is quite limited. As the fund also doesn't have a benchmark, it is not immediately clear to investors whether these numbers translate to good or bad performance. Using Morningstar charts, we can see the fund has delivered about 8% since inception. If we assume the long-term asset allocation is around 35% global equities and 65% global bonds, we can do a performance estimate with common ETFs such as IWDA and AGGG to represent global equities and global bonds respectively. Calculating the returns give about 10.8%, though bearing in mind the ETFs are in US dollar terms, while the fund only has Sing dollar hedge share classes. As the fund doesn't have a US dollar share class, we will need to take reference from other funds on the currency hedging costs. Using JP Morgan Global Income, another global multi-asset income fund as an example, the Sing dollar hedge share class is about 3.2% lower in returns compared to the US dollar share class. So if we assume this as the estimated currency hedging costs, we can calculate that the Aberdeen Income Plus Fund probably delivered around 11.3% returns in US dollar terms since inception, which is slightly better than the 35-65 asset allocation mix of the passive ETFs. There are, however, many global multi-asset funds with Sing dollar share classes available in the retail market. Typical retail investors do not really care that different funds have different asset allocation mixes, and instead just looks at total return and distribution yield. While the Aberdeen Income Plus Fund is pretty new and is too early to tell if it will become a strong contender, its track record so far has been rather uninspiring, as there are several other funds in the market that have delivered significantly better returns. With that, let's summarize our findings. Aberdeen is a UK-based fund provider and had decent business and brand recognition in Asia before 2017, but unfortunately went through some challenging business decisions in the last decade. It currently manages about €438 billion worth of assets globally. The Aberdeen Income Plus Fund is a global multi-asset solution that seems to be created specifically for Sing dollar investors. It is managed by Ray, who is based in Singapore and is the head of multi-asset investment solutions for Southeast Asia business. Aberdeen unfortunately provides very minimal details on the fund. There is no information available on the investment strategy and process. We do not know how the asset allocation strategy is derived, or whether the fund uses quantitative modeling or fundamental research approach, or how the bonds and equity selection works, or how the income objective impacts the investment choices. There is also no benchmark or target return defined for the fund. As such, there is no way for investors to know whether the fund's performances are good or bad. While only incepted slightly over a year ago, the fund AUM is still quite small at around $139 million. The fund may have limited itself in this aspect with only Sing dollar share classes available. Aberdeen also hasn't done a good job in providing portfolio information of the fund. The fund webpage looks outdated, with no portfolio information at all. The fund fact sheet doesn't have the equity versus bond asset allocation breakdown, and mixes equity and bond exposures in the country and sector breakdown, making it difficult for investors to understand the portfolio construct. Given there are so many competing funds in the market, it should not be difficult for Aberdeen to find one with more comprehensive information and adopt from it. The fund has a target payout yield that is currently set at 6.5%, as well as an objective to generate and pay out only natural income. The underlying portfolio yield, however, seems to be declining over time, and is not enough to match the target payout yield. Performance of the fund since inception has been average among peers. Again, without a benchmark or target return, we do not know whether this performance is as intended. From an absolute return basis, there are definitely plenty of other funds in the market with better returns for investors to consider. In summary, Aberdeen has simply provided too little information on the fund to make a better assessment. Given the performance is not great, and that there are so much unknowns in the strategy and portfolio, I wouldn't consider this product at this point. This concludes my absolutely biased comments on the Aberdeen Income Plus Fund, and I hope it will help in your investment journey. May we all grow wiser and prosper.